Would you like to invest in one of the oldest and most profitable business models ever? Want to invest alongside Warren Buffett, who's arguably the greatest investor ever? Want to collect market-smashing passive dividend income while you do so? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. I want to tell you about a high-quality stock that pays big, growing, reliable dividends. These growing dividends are funded by growing profit because this business is providing society with necessary banking products and services that the financial system, frankly, can't do without. This company has been making money for well over 100 years, and they're highly likely to continue doing so for the next 100 years. That's probably why Warren Buffett has over $5 billion invested in this company. I've personally invested in stocks just like this one on my way to going from below broke at age 27 to financially free at 33. Best of all, the stock looks undervalued right now. Price is what you pay, but value is what you get. Why is that important? Because buying a dividend growth stock when it's undervalued should provide for a higher yield, greater long-term total return potential, and reduced risk. With this in mind, I want to share with you an opportunity I recently came across in shares of US BANCORP, which appear to be trading at a significant discount today. US BANCORP, stock ticker USB, is a bank holding company that offers a diversified mix of financial services, including traditional retail banking, wealth management, commercial banking, and payment services. Founded in 1863, US BANCORP is now a $55 billion by market cap banking giant that employs almost 70,000 people. Operating as the fifth largest American bank by deposits, US BANCORP has branches in 25 different states, primarily in the Midwest and West. Society as we currently know it would practically collapse without our modern banking structure. And as one of the largest banks in the United States, which happens to be the largest economy in the world, US BANCORP is massively profiting from their position of financial might. Don't take just my word for it though. Warren Buffett, arguably the greatest investor to ever live, is a longtime shareholder in US BANCORP. He has over $5 billion invested in the super regional bank. The core banking business model is one of the best out there. That's due to the float. Access to large sums of low-cost and low-risk capital deposits can be used to fund loans and other ventures that generate attractive returns. It's earning money off of other people's money. Pay one rate on the cash you take in and charge a much higher rate on the cash you lend out. Easy peasy profit. Now, the current pandemic has some political and financial ramifications for large banks in America. This will end up putting a lid on banks' dividends and growth over the near term. But don't let that blind you to the fact that large American banks are money machines over the long term. And money machines like this one tend to spit out lots and lots of dividends that are routinely growing. US BANCORP has already increased its dividend for 9 consecutive years. The 5-year dividend growth rate at 10% is impressive. It's especially impressive when you pair that with the stock's starting yield of 4.6%. That yield is 210 basis points higher than the stock's own 5-year average yield. With a payout ratio of 34.3%, this is a well-covered dividend. That said, banks' near-term earnings are collapsing in the face of capital reserve building to prepare for loan losses. So what looked like a very healthy bank dividend yesterday can be a dividend in trouble tomorrow. Just as well though, some of these provisions could end up being windfalls down the road if losses incurred aren't as bad as expected. I'm certain that dividend growth will be muted over the foreseeable future. On the other hand, you're getting that much higher starting yield to compensate for the near-term challenges. Either way, US BANCORP remains a quality financial institution that should do very well over the long run. Looking at business growth, US BANCORP has increased its revenue from $16.458 billion in fiscal year 2010 to $22.883 billion in fiscal year 2019. That's a compound annual growth rate of 3.73%. Meanwhile, earnings per share advanced from $1.73 to $4.16 over this period, which is a compound annual growth rate of 10.24%. In my view, this is impressive. The last decade has been extremely tough for banks. Record low interest rates and onerous regulations have weighed on the entire industry. Yet US BANCORP is putting out double-digit bottom line growth. A lot of the excess bottom line growth came down to operational excellence, with improving margins and buybacks moving the needle. For perspective on the buybacks, the outstanding share count is down by 18% over the last decade. Looking forward, CFRA is forecasting that US BANCORP will compound its earnings per share at an annual rate of 5% over the next 3 years. They cite net interest margin compression, decline in merchant processing fees, and overall economic uncertainty as key headwinds and risks. But the bank's diversified revenue stream, resilient mortgage exposure, and the opportunity to strike on accretive acquisitions while moving to a more digital business model are all tailwinds to consider. I think that's a pretty fair assessment of US BANCORP in this environment. We're talking about a 50% haircut in profit growth over the next few years, relative to what the bank has enjoyed previously. It's significant, but it seems warranted here. Nonetheless, we're not talking about any kind of imminent collapse here. And while dividend growth will be capped, US BANCORP should be positioned well to aggressively grow the dividend once things start to clear up. Moving over to the balance sheet, the bank has an outstanding financial position. They have $495 billion in total assets against $443 billion in total liabilities. Their senior unsecured debt has the following credit ratings: A1 from Moody's, A+ from S&P, and AA- from Fitch. We're talking about numbers here that are well into investment grade territory. The bank's profitability is extremely robust, easily competing with the very best banks out there. Over the last 5 years, the firm's average annual net margin of 28.07% and annual return on equity of 14.26%. Net interest margin came in at 3.06% last year. There's a lot to like about US BANCORP as a business, which is probably why Buffett is so heavily invested. The float that a bank builds up is a powerful tool, and the sticky nature of deposits means this competitive advantage is not easily lost once gained. Plus, US BANCORP is one of the largest banks in America, creating scale where scale matters. Of course, there are risks to consider. Competition, regulation, and litigation are omnipresent risks in every industry. Banks are highly exposed to economic cycles. The pandemic-induced recession will hurt banks through loan losses. Recessions actually hurt banks twice over. The lower economic activity reduces earnings, while loan losses stress the balance sheet. Low interest rates, which now appear to be here to stay for some time, hurt the profitability of banks. Even a well-run bank will be capped on growth. And there's political risk for banks, making buybacks and dividend increases frowned upon right now, even if those moves are financially viable. With these risks known, I still think US BANCORP is a fantastic long-term investment idea. The 35% year-to-date drop in the stock's price has made it look even more fantastic. The stock is available for a PE ratio of below 12. That's significantly lower than the broader market's earnings multiple. It's also well off of the stock's own 5-year average PE ratio of 14. Then there's the cash flow multiple of under 10, which is much lower than the 3-year average price to cash flow ratio of 12.4. And the yield, as noted earlier, is substantially higher than its own recent historical average. I valued shares using a dividend discount model analysis. I factored in a 9% discount rate to account for the high yield and a long-term dividend growth rate of 5.5%. That's a rather low dividend growth rate for a quality bank like this, but near-term political and financial issues will limit dividend raises for the next year or so. The long-term picture remains quite bright, and I think averaging out that dividend growth over decades will likely be higher than what I'm modeling in, but I'd rather err on the side of caution, especially with a 100-year event currently upon us. The dividend discount model analysis gives me a fair value of $50.64. The reason I use a dividend discount model analysis is because a business is ultimately equal to the sum of all the future cash flow it can provide. The dividend discount model analysis is a tailored version of the discounted cash flow model analysis, as it simply substitutes dividends and dividend growth for cash flow and growth. It then discounts those future dividends back to the present day to account for the time value of money, since a dollar tomorrow is not worth the same amount as a dollar today. I find it to be a fairly accurate way to value dividend growth stocks. Morningstar rates USB as a 4-star stock with a fair value estimate of $45. CFRA rates USB as a 4-star buy with a 12-month target price of $42. I came out on the high end, but we all agree that the stock is cheap. Averaging the 3 numbers out gives us a final valuation of $45.88, which would indicate the stock is possibly 22% undervalued. Here's the bottom line, guys. US BANCORP is one of the largest and most profitable banks in all of America. Warren Buffett has over $5 billion invested in this bank for good reasons. With a 4% plus yield, low payout ratio, double-digit dividend growth, and the potential that shares are 22% undervalued, dividend growth investors may want to consider investing alongside Warren Buffett and buying this stock. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did. and let us know in the comments what you think about this stock. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also be sure to check the description box below for some important links, including the link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is and am often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.